Every year, thousands of people pay a higher tax rate than some of the wealthiest people on the planet. Not because of loopholes, not because of corruption, because the tax system and wealth work in two completely different ways, and most people only ever learn one of them. Here's what's actually happening. The way most people earn money is simple. You work, you get paid, the government takes a cut before you even see it. That's income, and income gets taxed the hardest. But the wealthy, at a certain level, stop relying on income almost entirely. Their wealth sits in assets, company shares, real estate, investments. Those assets grow every year, and growth, until you sell, is not taxable, not in most countries. So the wealth keeps building, quietly, untouched. But they still need to spend money, so here's what they do. They walk into a bank and borrow against those assets as collateral. The bank sees billions in stock and hands over a loan. That loan is not income. It is not taxed. They live off it, and the assets keep growing in the background. This is sometimes called buy, borrow, die. And the last word is the most important part. In many countries, when you inherit assets, the taxable gains from decades of growth are wiped clean. The next generation inherits the wealth at its current value, not the original price. The tax bill disappears, legally, permanently. Now, layer on top of that property depreciation, business expenses, losses on paper that reduce taxable income while the actual asset appreciates in real life. The tax code does not treat wealth and income the same way. It never has. That's not an accident. Understanding that gap is the first step to understanding how money actually moves at the top and what governments around the world are now scrambling to change. That part gets complicated fast.